I'd like to welcome up Todd Stevens from Inveniam, and they have another piece of this jigsaw of unlocking private markets. Welcome, Todd.
Thank you, Anthony.
There we go. So just explain for those who don't know who Inveniam are, what they do, etc. Quick rundown on what you do and where you're at right now.
Yeah, so Inveniam, we're an operating system for data. We have two business models. One's a traditional business model where we're solving some of the pain points with asset owners and asset managers on a traditional sense. But really our core focus is when assets trade digitally. And so we're a big cheerleader for everything that's going on here. We want all the security tokens to trade and the volumes to grow because we want to be that data layer for those security tokens. We want to be the decentralized Edgar database. So when you go into an exchange and you see a security token, like you're going to want to get underneath the cover. You need to understand what is beneath the surface. So you click in it, and there'll be a routing through the smart contract that will go to the issuer's database, so on their own system. So if you look inside our database, we're not a centralized database. You look at us, and we'll look like a card catalog. We'll have pointers to where all the data is. Very decentralized. Our strong thesis is data sovereignty. Asset owners and asset managers need to own and control their own data, and we think this is going to kind of be the main mantra of Web3, and we think that that this will help bring more assets onto the blockchain because people understand that they own the data and that data is composable. They'll be even able to take that data and push it into indices and get paid for it. I mean, in the real estate industry, there's a behemoth called CoStar, and what they do is they take unstructured data from their customers and they structure it and sell it back to their customers. And it just drives the customers crazy. And so what we're doing is we're putting the ability into the hands of the asset owners to structure their own data.
So yeah, so if you've got a public company, right, they've IPO'd, they've got these regulatory obligations about reporting, so you want to buy Apple shares, you can find out a lot about Apple, but in this private market space, there isn't that transparency, right? So if you've got an investor, I guess you might have family offices, etc. You offer them SpaceX, or you say I've tokenized and distributed Marina Bay Sands. They go, yeah, we'll have some of that. But most of the time, it's not that, right? You're looking at portfolios of real estate or other type of assets, and you need good information about it, right?
Yeah, like Graham was mentioning, I mean, just recently, I mean, their biggest take-up is funds. And then ADDX, their biggest uptake is funds. Funds are complicated beasts if they want to trade on a secondary market basis. You have to get underneath the covers to understand what's in the funds. And that's what we do. We can help people zero into each of the line items in the funds, get a valuation on each of the private equity items in those funds, and we can roll it up and send it out. That's not going to be where they trade. It's just the indicator of value. They'll trade at either a premium or a discount to that. But what we do is enable the market to be more efficient. And again, back to what you were talking about before in terms of connecting the global distribution network. We love what Ownera is doing, the orchestration layer. We also think that there's going to be a lot of broker-dealer to broker-dealer kind of connectivity, and we play a big role in that as well. I mean, because the more assets that are trading, the more they need a data layer. So we see a big opportunity in the global connectivity of ATSs. I mean, and again, like most of the people inside Inveniam, we're old retired bankers and from centralized finance, but we kind of know what the plumbing looks like, and so we're big believers that I mean, history is just going to repeat itself, and you have some pattern recognition. And the key pattern recognition that we see with ATSs is back like in the ECNs when they used to trade back in the 90s, and then you had like 7 or 9 major ECNs. And then all of a sudden, the ECNs kind of clubbed together, and they said, you know what, we think we need to interconnect. And 7 of the 9 of them interconnected, Island, Archipelago, Bloomberg Tradebook, and 2 of them didn't. And then they kind of went along their way for about 3 or 4 years, and then boom, Reg NMS hits in 2005, and the ones that had connected were future-proofed. And they got all the volumes. The other 2 that didn't connect, they merged and got bought out within 18 months. So I think We'll see the same in the ATS land. There'll be a lot of connectivity globally. And that connectivity is because you don't know where the buyer's going to be and you don't know where the seller's going to be. And then I think there'll be an ecosystem of interdealer brokers that kind of go around because there's a lot of regulatory issues with respect to kind of reverse inquiry and whatnot. So if something's not listed on your exchange in Singapore, you can't actively market that asset, but you can take reverse inquiry. I mean, this is why God created interdealer brokers. I mean, it's gonna repeat itself.
So you're seeing those parallels from traditional finance, TradFi as I call it. I think it's interesting. You see a lot of, you'll see nowadays, a lot of individuals, they stand up on stage and say, I've worked 25 years in capital markets. I guess you're seeing a lot of the migration of people who lived through electronification of the foreign exchange markets or whatever, then attracted to this type of environment, right? To see it play out again.
Yeah, absolutely. Right? I mean, and again, like, these same people who are the people that collected they clipped coupons at banks, and now they see the upside. They say, this might be the hockey stick trade for me. But more importantly, we have a community of people around here that act like owners. And that's super important because when you lived in TradFi, everybody wanted to fight each other for that slice of the pie. And the beauty in this business, the pie is growing, so we're not fighting for slices. That's why we can all be friends and grow because there's so much growth that's coming, and we have such a massive addressable market. It's just it promotes kind of friendly coopetition, let's call it.
I guess in the private markets, if you manage to run a digital exchange and you had 1,000 great assets and you had 10,000 serious investors, and I guess many don't have that volume, you've still only got like a massive, tiny fraction of the potential addressable market. And you're probably still not at a level where you can start to generate enough distribution for liquidity, right? Because the investor that wants to buy that asset may be in Abu Dhabi or Singapore or London or...
Yeah, I mean, I would go back to that ECN analogy. The go-it-alone people will die. And interoperability will reign. Technology will continue to evolve at such a fast pace. You have to be permissionless. You have to be public, and you have to be interconnected. And again, all these ATSs will learn to share fees. Who knows what the model is going to evolve to be? But whoever brings the value, it's going to mimic largely the centralized finance kind of fee model. I mean, if you're selling a money market fund, you're going to get paid much less. If you're selling a private equity stake, you're going to get paid a lot more. If I onboarded the private equity stake, I get 60% of the value, and you sell it, you get 40% of the value. These things are going to evolve, and it's going to be very traditional, and it's going to look a lot like what we've seen before, but it's going to be underpinned by a layer of efficiency that will just drive the volume growth. And again, we don't know what that tipping point will be, but again, I think education has a lot to do it for it, and the work that Anthony, you and the team do with the new brand of GBBF is... Yeah.
It's a bit of a mouthful. GBBC Digital Finance.
Sorry.
There we go. Yeah, very good. So we're talking a panel about global distribution. Obviously, with Ownera, we're focused on doing the distribution, having rails that can unlock some of this. You're focused on the data. So what are some of the challenges for you around global distribution then when you're looking at the data problem and how you do that?
For us, it's whether it's in a Singapore asset or a U.S. asset, I mean, it's all the same. So that's the reason we're spending a lot of time trying to connect the kind of the dots a bit, and that's why we're such a big fan of Ownera and what you guys are trying to do and try to bring together that orchestration layer, that global distribution layer. I actually, part of my role at Inveniam, I look after our corporate ventures. We probably have kind of two handfuls of investments, small investments we've made in a lot of different companies, and that's because we want to support them. I mean, we want to be connected to everyone either by contract or technology. We want our technology linked into all these liquidity pools, so we're heavily kind of on the side of pushing that global distribution network. And can I ask a question to you?
Please ask me a question.
So what's Ownera's thoughts on the? I mean, you guys play in a pretty important role in making this successful. How about just 2 minutes on Ownera?
Yeah, so Ownera, the global distribution problem, and I touched on some of it here, and the reason I'm chairing this not-for-profit group is you want to make sure that we knew from the outset you wouldn't have a situation where you'd have, for want of a better word, an exchange, right? And everybody will connect to that exchange. It's not going to happen, right? And at Ownera, we're not building an exchange. We don't have a venue with a matching engine, etc. The approach we took, we understood that, looking from the traditional world as well, that if you're going to have institutional engagement, you have different institutional players. They carry the regulatory licenses for whatever they do. And what we did with the protocol that we're been driving with the industry to have buy-in for, FIN P2P, the clue's in the name. What it enables you to do is establish peer-to-peer connections between institutions. Those institutions are either bringing assets, so you might have somebody representing an issuer or an exchange, and you've got institutions bringing investors. They could be private banks, asset managers, wealth managers, etc. In the case of exchange, they're bringing both assets and investors. And what they want to do, much as we heard Graham with those digital exchanges, is open up distribution. So they want to be able to establish a relationship bilaterally, peer-to-peer, from one institution that has maybe a pool of assets, and they want to reach another institution that has pools of investors, and off you go. It's something we've seen reflected in traditional finance in terms of the thought process of the way we think about this. But it's technology now enables you to do it digitally. The hard bit, I think a lot of people the last few years, everybody knew we wanted interoperability, but people have got them knotted up in the tech layer saying, we've got to make these blockchains interoperate. Actually, it was a bit nonsensical. If you're techie about this, people have bridges and they say, we're going to move this asset from this blockchain to that blockchain. Actually, what we're talking about here are not cryptocurrencies. Like Bitcoin's like a bearer asset. When you move it, you have a private public key pair, and then when I transfer it to you, you got the Bitcoin and I don't have to worry about it anymore. When you're digitizing securities, that's not the case. You're dealing with regulated securities. Ultimately, the person that's issuing the security is responsible for that. If I'm selling some security to Todd and he's sanctioned under some regulatory sanctions, then that's my problem and his problem as well. So actually in our environment, when we connect to these different environments with these rails, we're not moving those assets around. What we're doing is you have different assets tokenized in different environments. They could be on Ethereum or Stellar or Tezos or Corda or Quorum. These are all the names of different blockchains you'll hear. What we're doing is in those environments, the regulated securities, so somebody there will have responsibility for the record of ownership of that security, a transfer agent, a CSD, whoever it might be. And what we do is enable investors remotely with a cryptographic identity, so the investor has a unique cryptographic identity, to be able to invest in those assets. And when they do, what's happening is there's a real-time update of the record of ownership of the security with that investor, right? So the investor wants to invest in tokenized Marina Bay Sands. They have a wallet. Alongside it, they can see SpaceX and funds, and all of it's got good valuation data from Inveniam, etc. When they click, they don't know where that asset is. They don't care what blockchain technology it's on. Their private bank's just given them an app. Or maybe the private bank actually still presses the buttons. They ring up the guy on his boat and he says, yeah, I'd like to invest in that. But whatever they give them, when the investor clicks, in real time, you're updating the record of ownership. The transfer agent's going, you are now on the cap table of this asset, and you're releasing the funds to the seller. And that could take 3 seconds, as opposed to 6 to 8 weeks. And so this is the future. And when you can create distribution rails that enable you to update the record of ownership of the security and settle in real time, actually it doesn't care what type of security it is, right? I mean, the private markets is the biggest market on the planet, so start there. But it's a clean sheet of paper. It doesn't have 30 or 40 years of legacy like the public capital markets. But once you've built that new house and once you can do those things, maybe you can start to orchestrate public securities. And I think from a mindset point of view, we're very much of the view, I've seen the last few years, the industry spend billions trying to rewire the public capital markets from underneath, right? It's like trying to jack up an old house and change the foundations and drop it back down again. It probably won't happen. And if it does, it won't look very nice. So we say if you can digitize the private markets and with securities, you start with that blank sheet of paper, then maybe you start to move some of those public securities into that new house. So ultimately, we found an approach which enables investors, wherever they are in the world, brought to the network by their institution. It's that institution that's KYCing them, not the asset tokenization environment, to be able to see assets wherever they are in the world, whatever type of blockchain technology they're on, because they don't really care, right?
Yeah, and that makes me back to the point where in my previous life at Deutsche Bank, like I looked after a private markets team globally, and our biggest issue was selling private market assets in different jurisdictions. You just had to stay ahead of the accreditation standards in each location, and what you did is you went to a trusted source, you paid your lawyer $1,500 an hour, he spent 30 hours and told you what you knew that would take him 30 minutes to do. And here, all this can be tied up in a handy, a smart contract, like an on-chain ID that our friends at Tokeny have. People could have a little blue check mark next to their name, and you'll know they're accredited, so you know you can approach them in that jurisdiction. And so that's some of the efficiency that we're going to see. I mean, I think private markets are meant for distributed ledger because it just enables their ability to move and trade.
And you've still got some of that complexity behind that, legal, reg, et cetera. But with the technology, with these methods, you can do that before the trade, right? So when you bring an asset into this environment, the asset has attributes. We say, oh, it's shares in a private company, it's issued out of the US, it's under a Reg S exemption, we're issuing it internationally, we can't issue it to these jurisdictions, it can only be for accredited investors. That can all be codified, right? And then on the investor side, the investor comes to the network. They're carrying attributes, actually. I'm domiciled in London, I'm an accredited investor, I'm not sanctioned, I'm not a PEP, et cetera. These can all be codified, and then when you do the transaction, all those things are known, and then that marriage can come together and make that transaction happen. So a lot of it is about, there's still some complexity, there always will be, but it's taking that before the transaction happens, right? And then you can execute, invest in something, go on the cap table and settle in a few seconds, right?
So in the previous session, you mentioned assignment, like all their hard work, somebody could just come by and just pick it up and do it again. Could people do the same thing with Ownera? I mean, you're open source. Does that scare you guys, or in 5 years' time, are we going to see 3 Owneras, or 1 big Ownera and 2 lesser beings?
Yeah, this is a mindset, open versus closed mindset, right?
Yeah.
So you have companies that say, oh, I've got this amazing IP, I'm not going to tell anybody out, and I'm going to build something, and I'm not going to tell anybody about it, and then nothing happens, right? If you've got an open mindset and you've got the confidence to do this, right, we wake up every morning, we're focused on implementing commercial implementations of these FinP2P nodes. Somebody else could do it, right? Actually, it needs to be somebody that is relatively neutral, right? Because if it's one of the big vertical players, people will go, I'm competing with them on this other thing. Yep. So we focus very hard on being a thin, neutral layer. But other people could do it, and we could welcome that, much like these digital exchanges are talking to each other. This is the biggest market on the planet. You know, it's if there are other people trying to do what we do, that's validation that actually we're doing the right thing. And ultimately, this is a very big pie. Right.
And if we're fighting for the slices, we're missing something.
That becomes a philosophical thing. Do you worry about how many pieces you can slice the pie in, or do you worry about how big the pie is? And this pie is trillions and trillions of dollars, right?
Agreed.
Very good. Fantastic. Lovely to talk to you.
That's great.
Todd. That's great. Thank you. On to the next one. Thank you.